explain how Fibonacci works? Yeah, eShadow, it would be my pleasure. Let me go to a chat. The proper way to use Fibonacci levels, let me explain what Fibonacci levels are first. They are a mathematical equation that calculates common areas of support on pullbacks. You can also use Fibonacci retracement levels to identify common resistance levels on bounces. So you can use Fibonacci's to the downside and the upside. Okay, so using it to the upside, you're looking for support levels on pullbacks. Using it to the downside, you're looking for resistance levels on bounces. When you have a gap up, you need to anchor your Fibonacci level at the prior day's close. So let's use BLIN as an example. BLIN gapped up from yesterday and surged off the open. Now, the whole point of a Fibonacci level is to identify a move and then a pullback, where is support going to be found? So I would anchor my Fibonacci level. So here's my Fibonacci level, right? All right, there's my indicator. Okay, so I would grab my indicator. You anchor it at the prior day's close. Okay, you anchor it at the prior day's close. That's where you start drawing from. Okay, and then you're gonna pull the indicator up to the high of the day. Okay, you pull the indicator up to the high of the day. All right. Once you then do that, you now will see your Fibonacci levels are now plotted. Okay, I will make them bigger so you guys can see. Maybe it's easier on your eyes. These are now your Fibonacci retracement levels. Your most common Fibonacci levels are the 23.6, which is this first dotted line, the 38.2, 50, and then 61.8. These are potential areas of support on pullbacks. They are not a holy grail. I do not suggest anyone just goes, okay, every time the stock gets to the 38.2 Fib level, I'm just going to buy it. That is a horrible trading strategy. Don't do that. The way that I use Fibonacci levels is that I will identify these levels, these Fibonacci levels, and I will look for situations where other support indicators converge on that same price point. Case in point, you'll see here the 23.6 Fibonacci retracement level was lining up with your trade line and your VWAP indicator. Now, that would be a nice level of support. And you can see the stock came in here and we tried to hold support here until eventually that support level was indeed broken. It's very important you guys understand that just because the Fibonacci level lines up somewhere does not mean you're going to get support there. There is nothing that works 100% of the time. The same goes true for Fibonacci retracement levels. I'll just go to another example. Let me just pull up a random, let's use NEGG today. This is a big runner. All right, so let's use this one today. All right, so here's NEGG. So if I want to draw my Fibonacci retracement levels, let's say the stock looked like this. Okay, let's say this is what the stock looked like. And I said, okay, the high of the day has been put in. Let me draw my Fibonacci retracement levels. Now, in this situation, you need to start your Fibonacci from the low of the day because the low of the day is lower than the prior day's close. So you're going to anchor your Fibonacci levels at the low of the day or the prior day's close, whichever is lower. So in this case, the low of the day on NEGG is lower than the prior day's close, so we're going to start it from there. Then we're going to pull that Fibonacci all the way up to the high of the day, and now we have plotted our Fibonacci retracement levels. I'm going to make it bigger so you guys can see, easier on your eyes. Now you'll see we got our Fibonacci retracement levels. And what you will notice is on this pullback, look at what took place. We found support where? NEGG found support at the 38.2 Fibonacci retracement level, but what else is at that same price point? Look at this orange line. This orange line is your VWAP indicator. So in this case, VWAP lined up with the 38.2 Fibonacci retracement level to create an area of support, which would also be considered a buying zone. And then look at what the stock did after the fact. Next lesson in Fibonacci retracement levels. Once the high of the day is broken, you need to readjust your Fibonacci level. You don't leave it here. So now if the stock looks like this, and I say, wow, okay, where's my neck? Where are my Fibonacci retracement levels? If you leave it here, this is incorrect. You have to draw the top, you have to grab the top of the fibs and now move it up to the new high of the day. And those are your new Fibonacci retracement levels. And now look, a new high of the day. You got to draw it all the way up again. Okay, new Fibonacci levels. And this time, look what you had here. You see the pullback? We pulled back right into the 23.6 Fibonacci retracement level. And you can see we moved higher off of that into the close. So this is a quick little lesson on Fibonacci retracement levels. I hope this helps. So there's an entire course in our curriculum dedicated to Fibonacci retracement levels. It's one of the indicators that I use every single day, but there's a lot of different ways to use it. You can use it as resistance. You can use it as support. You can use it on a daily chart. You can use it on an intraday chart. There are many, 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 many different ways to use Fibonacci retracement levels. But for the sake of time, I'll give you a quick little overview. All right, so I hope that helps answer your question.